Now, your company news headlines on Bloomberg Radio.
And I'm John Tucker, right here with Paul with Company News. Walmart, of course, they're the biggest retailer in the world. They're testing digital labels, so these light up when activated with an app. So when you start working there as a greeter, you'll have to know this. The devices already used by employees at a few dozen stores where they flash green to help the shelf stockers and blue to assist, I don't know what blue is, to assist product pickers fulfilling online orders. Walmart planning a pilot for customers later this year. These lights are possible after a years-long effort behind the scenes in which Walmart's been automating the warehouses that supply stores and online merchandise. So the goal is to improve profitability as well as productivity and maybe get rid of people like you, the greeters.
Exactly.
The first human patient, of course, to receive a brain implant from Elon Musk's startup Neuralink, recovering well, and the initial results of the procedure, at least according to the company, are promising. On X, Elon Musk wrote that Neuralink's first product will be called telepathy. It'll enable control of your phone or computer and through almost any device just by thinking. So it's really primarily aimed, at least in the initial stage, to people who are handicapped, paraplegics. And is that hamburger you're eating tied to a former southern slave plantation that's now the country's largest maximum security prison? The Associated Press followed unmarked trucks packed with prison-raised cattle rolling out of the Louisiana State Penitentiary, where men are sentenced to hard labor and forced to work. Turns out they are supplying a Texas slaughterhouse that feeds into the supply chains of giants like McDonald's, Walmart, as well as Cargill. The AP says prison labor is tied to hundreds of millions of dollars worth of products. And that is your company news.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, looking at these markets right here, a little bit of red on the screen here as we wait for some of the big tech earnings after the close from Google and others. S&P off about 0.1%, same for the Dow. The NASDAQ off about 0.5%. The Russell off about 0.9%. Yields a little bit higher here. We have the 10-year Treasury up about 2 basis points, 4.09%. WTI crude oil, it's up 1%, $77.55. Continued concern for the supply of Middle Eastern oil. Bitcoin up 0.5%, 43,400 on the cryptocurrency. Right now, let's head down to Washington, D.C. World and National News with Amy Mars.
All right, thank you, Paul. A push to impeach Homeland Security Secretary Alejandro Mayorkas is gathering steam with House Republicans. The House Homeland Security Committee is meeting at this hour to debate those 2 impeachment articles against the secretary. Bloomberg's Jody Schneider with the very latest.
They're going to advance articles of impeachment either today or tomorrow, which will cap off this year-long campaign against the secretary. Sets up a historic floor vote. He would be the first cabinet official impeached in almost 150 years if this happens.
Now, the House Speaker says that they intend to move ahead with that impeachment vote with a full House vote as soon as possible. Bloomberg's Jody Schneider reporting there. She says Republicans accuse Mayorkas of breaching the public trust by failing to enforce immigration laws. Neuralink is a tech company owned by Elon Musk, and they've announced they've implanted a brain chip into a human for the first time, representing what experts hope is a major step into connecting the human brain to computers. This is only the first test. Dr. Lee Kroll, a neurologist and assistant professor at Temple University, says these early results are promising for the field.
This would be a major game changer if it were to be proven to be safe and effective.
If deemed successful for widespread use, experts hope that paralysis patients and others suffering from traumatic brain injury could use a computer to speak using this chip. The International Monetary Fund raised its forecast for global growth this year on better-than-expected expansion in the U.S. and fiscal stimulus in China, warning of risks from wars and inflation. The IMF's World Economic Outlook predicts the world economy will grow 3.1% this year. That is up from 2.9% in October. The fund kept its 2025 forecast unchanged at 3.2%. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. Paul and John.
All right, Amy Morris, thank you so much. We appreciate it. John, here's a story for you because I know you're a big car guy. Lamborghini sees full order books as super rich. Keep shopping. I have to ask you about that. CEO says no signs of weakness in market for supercars. Italian company introduced its first plug-in hybrid last year. So Lamborghini has sold out of supercars until 2026 as the wealthiest consumers show little sign of being hit by a broader global slowdown.
The one thing that's missing in this story, and I don't mean to be critical.
It's a quote from Matt Miller, I think.
Well, a quote from Matt Miller, his take on it, but how much these things cost.
Weren't they like $200,000, $300,000, $400,000, I think?
I think that's just like for the option package.
Oh.
So, but anyway, so it looks like they're facing the same sort of dilemma as we heard from Mary Barra, that they're going kind of like in the hybrid direction instead of fully electric vehicles.
Right.
While they're still exploring that, they're going to wait for others to take the lead on that, and then they're going to try to perfect it when the market for electric vehicles, fully electric, becomes more mature.
You know, I'm not a supercar guy, like a Matt Miller, like a Barry Ritholtz, like a couple of my sons, but I would think, having been around them enough to know, part of the engine, like a large part of it, the looks, the performance, all that kind of stuff, but if to hear those engines roar, that's part of what you're paying for. And if all I get is a little electric hum, that's not going to cut it.
That's not going to do it for you.
No, so if I'm Ferrari or Lamborghini,
they pipe it in with, like, I don't know, it's just like, you know, recorded sound of an engine.
Yeah, I mean, I just don't see how it's going to go in that part of the market. But it's interesting, and I guess it's no surprise. But at the very, very high end, they are still buying with the vengeance. And, you know, supercars are just another example. So, you know, they see you have to wait till 2026 is the wait list for a Lamborghini. Fortunately, I'm not in the market for a Lamborghini, so no worries there. John Tucker, I don't know. He may be patient enough.
I got my Subaru. It's going nowhere.
This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, this radio program from 10 a.m. to 12 noon every day is entitled Bloomberg Intelligence. We like to lean on some of the research analysts we have around the world, almost 400 research analysts covering 1,200 companies, 200 industries, and we're going to do that. We're going to lean on them this hour. Bloomberg Intelligence senior transportation analyst Lee Klaskow is going to join us to talk to us about UPS cutting 12,000 jobs, making everybody come back to work 5 days a week, what's going on in the world of global logistics. Then Tim Craighead, he is Bloomberg Intelligence European equity strategist. He's based in London. We've got him in New York this week, so we're going to have him in studio here to give us an outlook for UK and European equities. And then we'll finish out the hour with Mandeep Singh, Bloomberg Intelligence senior tech analyst. We're going to look ahead to some of those tech earnings after the close today and the rest of the week. Tech's been a bellwether for this group for a long time. Can it continue its leadership position? We'll check in with Mandeep on that. Right now, let's go to John Tucker for a Bloomberg Business Flash.
All right, as far as the risk assets go right now, I'm going to say the traders are in something of a holding pattern until we start with more of the earnings from the tech companies in particular. Right to yields, the 2-year, which is more policy reactive, that's 5 basis points higher right now at 436. And of course, this comes after the data that we got at 10 o'clock showing resilience in the U.S. labor market, job openings. This is the JOLT survey. Unexpectedly rising in December to the highest level in 3 months. Fewer Americans quit their jobs, so workers are growing more cautious just a bit, even as labor demand, that does remain strong in the U.S. And of course, the first of the so-called Magnificent Seven stocks, the mega caps, report earnings today. That's going to be a major test of whether the rally in stocks at this point is sustainable after yesterday's record close. The S&P 500 down just 6 points. But stocks can continue to push higher, at least according to Brian Levitt at Invesco.
I want to be exposed to equities in an environment after the peak in inflation, after the end of tightening, after the peak in interest rates. It's not to say that every day or every week is going to be glorious or I'm going to be missing out every day or every week, but we're in an environment where over the next few years, markets should perform well.
Right now, again, the S&P 500, 5 points lower, down just 0.1%, 49.23. And the Dow Jones Industrial Average, 24 points lower at 33,308. The NASDAQ 100 right now, 63 points lower. That's down 0.4%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash, Paul.
All right, John Tucker, thank you so much. We appreciate that. We are live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube, so you can head over to youtube.com, search Bloomberg Radio or search Bloomberg Podcasts, all that kind of stuff. We'll get you to where you need to go. We're also in your dashboard, Apple CarPlay, Android Radio. What is it? Android Radio.
Do Lamborghinis have this?
I don't know. They should for what they're charging. I mean, we'll have to ask Matt Miller, because I'm sure he's tooling around in a Lamborghini. So anyway, you can find us pretty much everywhere you need to go. As John was just reporting a little bit of red on the screen here, let's check in with Nora Melinda. She covers all the markets for Bloomberg News, and she joins us here in our New York City studio. Nora, what are you looking at?
Well, let's kick it off with that UPS news. Just insane. UPS is planning to cut 12,000 management jobs and explore the sale of its Coyote truck brokerage business. This all comes after the CEO is saying that, it's taking offset soft demand and higher union labor costs. So we are seeing a lot of a bit of a sell-off here. We have UPS shares down as much as 8.5%. I know we'll be hearing from Lee from BI very shortly, but this is really the lowest level that we've seen since November of last year and the biggest one-day drop since April of last year.
But the emphasis is that it's going to be management jobs, not the delivery folks you see on the
Right,
street
that seems to
working
be the
so hard.
consensus. As you all mentioned earlier, they are pushing them to be in the office 5 days a
That's
week.
what we're talking about.
That's what everyone has in focus.
It's like,
as if
who
we're
are
not doing
these
it.
people? And first, you can't work from home if you're a UPS delivery
But I mean, I guess it's management roles. So are they
Management,
actually,
okay.
so we have to think about that. But the job
truckers.
reductions actually accounts for about 14% of 85,000 full and part-time managers. This will account for hopefully saving the company $1 billion this year and hopefully more in years to come.
Yeah, we got your package. It's at my house. It's on the port. You want to come to my house and pick up your package?
Exactly. That's how they roll.
That's how we're moving.
All right, Whirlpool.
Yes. Looking at Whirlpool, it's currently down about 6.7% today, but it did project that 2024 sales will be weaker than Wall Street expectations. This all comes after the idea that consumers are maybe foregoing appliance upgrades. I don't know what you all have at your houses and if you're really interested in upgrading right now, but a lot of people are really sticking with what they have, is what it seems to be. And this outlook is really renewing concerns about the U.S. consumer and just the resilience that we're seeing in the U.S.
Well, can you even get? I remember during the pandemic, like if you wanted to get a new refrigerator, forget it. If you want to get a new couch, forget it.
Everything
backlogged. Everything backlogged. I wonder if that's normalized.
I mean, I think that we are seeing, we're really just seeing consumers kind of deciding whether or not they actually want to get these upgrades. That doesn't necessarily mean that there isn't expectation for that to be possible, but I think people are really just thinking about how much money that they really have and whether or not they're willing to pour that into an upgrade instead of just sticking with what they have.
Well,
I will just opine to jump in here that the most poorly engineered product on the planet Earth happens to be refrigerators. That's across all brands because they all eventually leak. Now think about it. Having a door that has the refrigerator and the ice cubes coming out of that, it's impossible. It's just like physics doesn't allow that to happen without a leak eventually.
I don't care to think about it, but I'll go with your thing. All I know is when we bought the sprawling Jersey Shore estate just this past year, totally renovated kitchen, you open up the freezer, no ice maker.
Okay, well, that's what you want. No, I've been told, don't get an ice maker, and certainly don't get the thing in the door where you can get the cubes in the door.
That's the fun stuff. All right.
And buy a separate unit that just makes ice, put it on the counter.
That's when we
But
know
what's
it's our
really
place.
interesting here is as we think about, the home sale market and we're thinking about existing home sales, since they are at a multi-decade low, that's where they were seeing a lot of those sales. You're seeing it in people who are, as you all say, the used homes.
Yep.
Isn't that what we say? Used.
Yeah.
So we're not really seeing people really interested.
All right, what else you got? We got
I want
time
to
for one
wrap
more.
up with Pulte Group.
Yep.
This is a home builder. As you all know, I cover the real estate space, so near
Yes.
and dear to my heart. But we're looking
Stock's been ripping.
we're looking at Pulte Group shares rising as much as 4.4%. This is really the highest intraday level on record for the company. And this is all coming after it saw a 57% increase in orders year over year. And as we know, for home builders, what analysts are really looking for are orders. We're looking at gross margin. That's really what's of interest here. We are seeing a bit of weakness in the margin area, especially as we think about incentives, and we're seeing these rate buy downs. Analysts are really looking this year into 2024 to see whether or not these home builders are really able to sustain themselves without having to do these rate buy downs or offer more incentives.
My big question with all the home builders, where are they finding land on which to construct these new homes?
Yeah, I know.
I mean, that's got to be their biggest challenge, right?
Well, I know in certain parts of the country, but they're building where, they're not building in like New Jersey.
Right, it really
Right.
depends on which region that you're looking at.
We have
because
no
they're-
more land left in New Jersey.
No, thank you. We've got enough. Everybody can
It's
leave.
all taken.
Yeah, it's all taken. All right, Norma Linda, thanks so much for joining us today. Norma Linda covers all the markets for us. All right, UPS had some, just some disappointments, as Nora was just reporting, laying off some people. Ben Elgin, Bloomberg News, has got a great story out today. FedEx, UPS struggle on EV transition as delivery demand grows. Costly electric trucks and charging complications are hampering progress. I didn't even think about that. Like, they got to go electric too, and if they can't get the trucks and all that kind of stuff, how are they going to get that package to me in 15 minutes?
They're going electric because it's good for the environment, or they're trying to save money?
I don't know. Let's check in with somebody who actually, we pay this guy to think about this stuff. Lee Klaskow, Senior Transport, Logistics, and Shipping Analyst, one of the best on the street. We got him at Bloomberg Intelligence. He's down from our Princeton Bureau. Hey, Lee, first, let's just start with the news at UPS. I love UPS. I love the brown trucks. They deliver this stuff great. What's going on? The stock hasn't done much in a while. I know they've got some union issues, which they resolved earlier, and now they're laying off some people and forcing everybody to come back to work. What's happening at our good friends at UPS?
Yeah, I mean, they're really just reeling from the impact from the labor negotiations they had last year. So running up ahead of those negotiations, a lot of shippers were like, you know something, I'm not going to use UPS because I might want to use one of their competitors like FedEx or even the Postal Service because I don't know if my stuff is going to be able to get where it needs to go on time. So a lot of that diverted freight, is kind of deleveraging effect on the network, which really weighs on margins. And then, they had the negotiations. They have a contract in place, which is fantastic for UPS and also for the Teamsters. But a lot of the initial costs of that new contract are in year one, and so that's like a real big hit to margins. That coupled with the fact it's taking some time for them to win back some of that share. On today's earnings call, management noted that they've won back about 60% of that share. So it's going to take time for them to get that share back to where it needs to be. And again, these are networks, and when you're talking about freight transportation, it's all about building density, because the more stuff you can deliver at the same time, the better the margins are. And that's what they're really working through right now. What I thought was kind of one of the more interesting little tidbits in the call this morning is that they think that this year that the small package volume from an industry standpoint is only going to increase like 1%, which to me I thought was a little pessimistic. But all in all, they're really dealing with tepid demand. They're dealing with rising costs, and they're obviously taking those costs pretty seriously, as you mentioned earlier. They're laying off or planning to lay off or reduce heads, however nicely you want to say it, 12,000 people, and then also they're looking to get. They're putting their brokerage business, which is called Coyote, under a strategic review. Coyote is the third largest freight broker out there. So one of the largest publicly traded ones are C.H. Robinson. People might not know that, may know that name. Also, RXO is another pure play brokerage, is Landstar. There's a couple private ones. A lot of large companies like J.B. Hunt have their own brokerage business in-house.
You got, sorry for a series of stupid questions, but this
Sure.
is who you're talking to. What is a freight? What's their role, and what do they do? A freight brokerage?
So they're pretty much get-together buyers and sellers of freight. So if you think about it, so if you're a shipper and you have a load that you need to get from point A to point B, you might use a broker to find a truck to carry that load. and the broker kind of makes a spread in between what they're charging the shipper and what they're paying the trucking company. What's happened is, it's a very cyclical business. There's great highs and kind of depressing lows, and margins can be very volatile during this cycle.
So this just to back up, this brokerage that they own that they're now getting rid of, you could have gone to them and they could have picked a shipper other than the company that owns them, UPS.
Yeah, so UPS could potentially use its own in-house brokerage to move a trailer load of freight between two of their sorting facilities. Or if you're Walmart and you have an extra load that you need to get from your DC to your Spring Lake Walmart. I don't think there's a Walmart in Spring Lake.
Brick Township.
You might use them because either the carriers that you're contracted with don't have the capacity, or you're trying to take advantage of cheap rates in the spot market. And right now, truckload rates are extremely cheap. They've been bouncing along the bottom for quite some time. And so shippers might like to leverage that. Intermodal is an example. So, the intermodal space, which is railroads, that's when you see like 2 containers on top of a railroad. They're facing increased competition because of the loose conditions that are in the spot market. And a lot of those shippers might use brokerage to try to find try to find a carrier to carry their loads.
I think in there it sounded like you just said there was a freight recession, or at least implied
I've been calling that for a long time.
Okay.
Well, there has been for about 2 years now.
I mean, how severe is it right now?
The way we look at it, we're probably a little optimistic about 2024, kind of a glass half full, and it's filled with a really good Cabernet. So I'd say we're probably more optimistic than most. We've been saying that we didn't feel that the economy necessarily had to go into a regular recession, and just because you go into a freight recession doesn't mean it's going to lead into a regular recession. The freight recession is really driven by a number of things. First and foremost is they had really difficult comps during the pandemic. You were talking about trying to get a refrigerator. Everything was just gummed up during the pandemic, and so capacity was in high demand. And the problem with getting capacity was that there weren't enough workers to either be in the trucks or be on the railroads or be in the air freight area. So there was a real issue there, and so we just saw a backup in demand, and then all of a sudden that demand got fulfilled because supply chains started loosening up. Here we are today. You have moderating economic demand. You have an ISM in negative territory, so the manufacturing economy is not great. You have some difficult comparisons. So when we look at railroads, for example, not to be all over the place, but when you look at railroads, last year was a fantastic year for Canadian grain. This year is going to be a normalized crop, so that's a decline in volumes that the railroads are going to have to deal with. Railroads at Canadian Pacific and Canadian National. Automotive is expected to be strong this year, continued for the railroads, but coal is probably going to be weak because the export markets are probably going to start to cool, and they have some really serious, difficult comparisons. And intermodal is really a crapshoot. We're pretty optimistic about the domestic demand, which is more truckload competitive, just because the rails have gotten a lot better at improving their overall service. So we started talking about UPS, and somehow
now we've got all across logistics. See, that's because Lee covers the railroads, he covers the trucking companies, he covers the logistics companies, he covers the shipping companies, like big ships on the seas, and he covers it all. So we just call him basically logistics analyst. I mean, if you got to get a box from point A to point B and you want to know how to do it, you talk to Lee Klaskow, and that's it.
Logistics Lee.
Logistics Lee. There you go. Very
Did you know
good.
with ships, the Baltic shipping rate or whatever it's called, it's called Baltic?
Yeah.
Because the Baltic Cafe in London is where all the shippers would get together, and they would set the rate around coffee or booze or whatever.
Boy, more.
The Baltic Cafe.
There you go. All right, Lee Klaskow, we'll let you go. Get back to work. Lee Klaskow, he's a senior transport analyst and for Bloomberg Intelligence down at our Princeton bureau. I mean, I guess doing decades of newscasts, you learn a thing or two.
Yeah, well, no, it's...
Or you just...
you read a lot of books because you got no life. Watch a lot of YouTube. Especially Bloomberg.
And this is what it brings you. All right, very good. All right, John. S&P 500.
Somebody's going to have to fact check me. I'm pretty sure that's right.
That's it. No one's going to fact check you in this audience. S&P down 0.1%. The Dow absolutely unched on the day. The NASDAQ off about 0.4%. Coming up, we're going to check in with Tim Craighead. He runs European research for Bloomberg Intelligence, and his day job is a strategist talking to clients about which European stocks to buy. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg News. And with this Bloomberg Business Flash, right now it would appear that traders pretty much on the sidelines until we get some of the other earnings today. Of course, after the close of regular trading in New York, we're going to hear from two of the Magnificent Seven. That will be Alphabet and Microsoft. And we're going to take a deeper dive into that with some of the BI guests later today. S&P 500 right now 3 points lower. That's down about 0.1%, 49.24 on the index. The Dow just turning higher, up 8 points, and breaking that down for you, because I'm curious, the leader right now in the Dow Jones Industrial Average, Visa, JP Morgan Chase, and the biggest drag there in the index that belongs to Boeing. In the S&P 500, you have 4 of the 11 major industry groups. They are higher, being led by financials. The biggest drag that's coming from real estate. The NASDAQ 100 right now, 65 points lower. That's down 0.4%. And again, the S&P 500 is lower, down just 3 points after yesterday's record close. As far as treasuries go, the yields on the benchmark 10-year note right now, that is unchanged, 4.08%. The 2-year, which is more policy reactive, that's 5 basis points higher right now at 4.36 after some of the data we got. Job openings rising to a 3-month high. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. I didn't even write that one,
just winging it.
Off the top of my head.
Just coming to you live. That's some of the best stuff. I never write stuff out. Now, Carol Miller's a big note taker. She's really super prepared. I admire that in her because she does like notes and notes of notes.
She actually is prepared,
yes,
which is like, I think what we're supposed to be doing.
I think she does it. She does it the right way, no question about it. John Tucker, all right, stick around here. You're not going anywhere. We got another 37 minutes here. Paul Sweeney, John Tucker here. We're in the Bloomberg Interactive Broker Studio. We're also streaming on YouTube, so head over to that internet thing and type in youtube.com and search Bloomberg Radio, and that's where we are. Let's talk UK stocks. Let's talk European stocks. We don't do that as much here, but we can do it today because Tim Craighead is here. And Tim Craighead is a European equity strategist for Bloomberg Intelligence. He joins us live here in the Bloomberg Interactive Broker Studio. That's important because he's based in London at the awesome Bloomberg European headquarters.
I have never been.
We got to get you over
there.
You got to go.
It is super cool.
Yeah, it is just awesome. I mean, and what I like about it, it's just a phenomenal building in the city of London, right by the Bank of England. But when Brexit happened, Mike was over there with the mayor of London saying, no, we're doubling down on London, which I thought was very cool because up until Brexit, a credible argument can be made that London was the world's financial capital vis-a-vis New York. A credible argument after a couple of pints at the local pub, and you could make that argument. Now you can't.
All right, remind me before he leaves, I'm going to ask him about congestion pricing.
Okay, very good. All right, Tim Craighead joins us. Hey, Tim, just give us a sense here. Let's start with the UK here. How did the UK trade last year? How did that market perform, and what's the expectation for this year?
So the UK did the same thing last year that it did in 2022, interesting enough, which is a big fat nothing. And if you think back in 2022, that was good. A stellar performance. Yes. It was a hero. 23, not so much, especially with the rally at the end of the year. So far this year, pretty much, again, it's sort of status quo. And our view is that's kind of where we're stuck. It's a funny thing. The UK market has this very odd composition where you've got this big basic material commodity base. You've got metals and you've got oil. Mm-hmm. You've got a big defensive brand base of companies like Unilever and Diageo, I think whiskeys, and healthcare, pharma, with GlaxoSmithKline, AstraZeneca. And then you've got a big dose of financials with the big banks like HSBC. Those three, you always end up with a driver that's good for one, but bad for the others, or vice versa. And quite often, they just sort of nix each other.
Because you don't have that technology thing, which is actually the leader of the U.S. market.
The entire TMT group, so you take internet and tech and the good media, e-commerce, the whole kit and caboodle, about 1% of the UK market.
What was the best performing stock, individual stock?
Rolls-Royce, if memory serves correct, which is...
This is the engine maker, not the car thing.
The engine maker that feeds into the rebound in commercial aerospace and defense.
And the cool thing about Rolls-Royce is like each of their engines has had a name, like the...
Really?
Yeah, well, going back to like World War II.
Okay.
The Merlin.
The Merlin, probably the most famous engine there ever was.
Yep.
They stuck that in Well, the Spitfire, I digress, and then
a good digress.
the
The
P-51D Mustang,
Yep.
and made it the greatest plane in the world.
Yeah,
So-
absolutely. Still my favorite fighter plane, the P-51. All the
There you go.
Spitfires right there. F-14 is number 3. All right, Tim. I actually think about this
We
stupid
digress.
stuff. We digress and digress more. How about Europe here? A little bit broader kind of markets in terms of the weightings here. How are your clients looking at the European market?
So the European market is reasonably well positioned from the standpoint of a diverse sector base. It still doesn't have the technology opportunity set that
SAP,
the US does.
AM.
You've got basically 4 big tech companies there. If you think about it, 1 or 5. One is SAP.
Yep.
We all know that.
Love them.
And it's doing fine. Look at its earnings, look at its stock price here as of late. It's been a really good call. That's one. ASML,
Yep.
which is chip manufacturing equipment. Absolutely a must when it comes to making things for, say, NVIDIA with their chipset. You have to have ASML's equipment. And then you've got semiconductor companies like Infineon and ST Micro. And they feed into more energy transition, autos, industrial applications, things along those lines.
But wait, tech in Europe, I want to lose weight. Isn't that where those weight loss drugs come from, or initially?
So that's Novo Nordisk, and you know, obviously Lilly is coming up as a big second here. But the pharma industry, business is a big business from a European perspective, no doubt. You've got really big consumer franchise. You've got luxury goods. And one of the bigger businesses over there that is different from here is the big high-end luxury auto companies, which are a big play on China. Another difference with Europe versus the U.S. is China is really important over there. I mean,
big buyers of the big German industrial equipment and things like that.
And it's pervasive. The UK has a ton of. It's actually the most exposed because you've got companies like Rio Tinto and Glencore, the big metals and mining that feeds in. But you've also got the autos. You've also got the industrials. You've got the luxury goods, and all of that adds to roughly a 450 billion euro revenue business from Europe selling to China. What happens in China matters a lot for Europe, which is a different story than what you have here from a U.S. perspective. You add all that together, Europe is okay. It's a lot cheaper from a multiple perspective than the U.S., but the earnings growth expectations for this year and next year are not as robust as they are here in the U.S., and it holds it back.
Do I have to worry about things if I'm a U.S. investor looking to invest in Europe? Do I have to worry about things like the currency translations, et cetera?
Well, you do, and it's kind of typical with currency as a double-edged sword. You know, I think the conventional wisdom this year is if the Fed cuts early and first, then you've got a weak dollar scenario to be told. Now, if you're a U.S. person and you're buying European markets, let's say all else being equal, that's going to be good for you because you're going to be carrying, you know, Europe over to here, which is a stronger currency. It actually ends up being negative for the European companies themselves from an earnings translation basis, but it's a different argument.
All right, Tim, you've lived in London a long time. You live just outside of London, so we'll get to congestion pricing. The economy here in the U.S. is good. We had a great GDP print. Inflation's coming down. How's the economy in the U.K.?
Yeah, actually, it feels a lot better than necessarily what the headlines might suggest. I think there are signs that housing prices are possibly stabilizing, certainly like everywhere else. If you end up seeing interest rates coming down and the expectations are for the Bank of England, as well as the European Central Bank to be cutting, then that could be a good thing as well. But big election cycle this year from a UK perspective that's going to cause a lot of noise, just like it is here in the US. Yeah, on the ground, you're traveling, you're looking around, you're going places.
Which you do.
It feels
He does it by
plenty
bike, though.
busy.
All right, go to your congestion pricing, because he might not be the right guy.
And everybody should care about this. London did it first, where cars coming into the central part of the city to reduce congestion are charged a fortune. New York City's trying to do that. But all sorts of, are you a fan or like?
Whether you like what I'm going to say or not, I guess we'll see. I am a fan. I think it is a good thing from
You're
the
never coming
standpoint
back.
But he rides his bike to work every day.
Yeah, I cycle.
Wait, and not like a mile. He rides like a long way in all kinds of weather.
But
Okay.
but it is a case where between congestion pricing, and they are expanding that congestion zone, as well as increasing things like cycle lanes and other elements of public transport, it is an easier place to get around unless you want to drive.
I don't have a choice, though.
See, we're going to get
Well,
John,
I'm going to take my bicycle at 2 o'clock in the morning from New
and
Jersey.
come through the Lincoln Tunnel. That's
Yeah,
what
but you don't have to worry about
No,
it.
we're gonna work with somebody we know and get so John can expense his congestion pricing. I think I know somebody who can help out with that. Tim Craighead, thanks so much for joining us. Tim Craighead, European equity strategist. And oh, by the way, he's also the director of research over there in Europe, so doing lots of stuff. Right now, let's head down to Washington, D.C., World and National News with Amy Mars.
Thank you, Paul. President Biden says he holds Iran responsible on the deadly drone attack on U.S. troops in Jordan, saying that Iran is supplying the weapons and that he has decided how to respond. He did not reveal his plans. Now, a warning from the U.S. to those tempted to attack troops in the Middle East. Secretary of State Antony Blinken.
We will respond decisively to any aggression, and we will hold responsible the people who attacked our troops.
Blinken said the U.S. response would be multi-level and sustained over time. He says the administration is working to prevent broader escalation in the region. Donald Trump and Nikki Haley are planning dueling fundraisers in South Carolina next month ahead of the state's GOP primary. They're catering to two very different audiences, as we hear from Bloomberg's Jody Schneider in Washington.
For former President Trump's fundraiser on February 20th, our top Republicans in South Carolina, the governor, Senators Lindsey Graham and Tim Scott. Haley's list is largely pulled from the business community, and this is the state in which she was governor for 2 terms.
Bloomberg's Jody Schneider reports Haley has raised $5.5 million since Ron DeSantis left the race this month. A source says she has several more South Carolina fundraisers planned before primary day, February 24th. A massacre in a remote area of the Mojave Desert apparently stemmed from a dispute about marijuana. San Bernardino County Sheriff Shannon Dykes describes the area where 6 people were murdered.
In the last year, our marijuana enforcement team served 11 search warrants in the immediate area where the murders took place. And they served approximately 40 search warrants to the west of that area that we call the Shadow Mountain area. So this is an area known for illicit marijuana.
5 suspects were arrested in connection with that shooting. Authorities have not said if the killings were cartel related. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Major averages right now unchanged to mixed. The Dow Jones Industrial Average at 32 points higher. That's up about 0.1% right now. 38,366 on the index. S&P 500, that is dead flat right now at 49.27. The NASDAQ 100, 61 points lower. That is down 0.4%. In the S&P 500, you have 5 of the 11 major industry groups. They are higher right now in the green, being led by financials, and the biggest drag in the S&P 500 as far as the industry groups go, that belongs to real estate. Schlumberger, that's one of the individual laggards in the S&P 500. That is down about 8.3%. The biggest drag in terms of index points there. And at Macro Policy Perspectives, Constance Hunter reminds everybody, you know, there's a Fed meeting this week. She says, pay close attention.
And I don't think that it's going to be a snoozer. And what we expect him to do is to lay the ground for why a March rate cut makes sense, right? We have PCE on a 6-month annualized basis already at their target, core PCE already at their target on a 6-month annualized basis.
And, of course, turning to the market, stocks entering the day, coming off another record high from yesterday. Earnings focused today. 30 companies overall in the S&P 500 reporting. And after the close of regular trading, the first 2 of the Magnificent 7 will be opening their books. And, of course, we're going to preview that in just a moment. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul.
John Tucker, lucky for you that Mandeep Singh just darkened the door, because otherwise I was going to interview you for the next 7 minutes.
We could keep this thing going for another 20 minutes, talking about refrigerators and Lamborghinis.
Exactly. Thankfully for all of us, Mandeep Singh joins us here. Mandeep is a senior tech analyst for Bloomberg Intelligence. You know, Mandeep, I look at these stocks, and they've always been great performers, and you can always say the bar is high. Boy, the bar is high this time. I kind of feel like just seeing about the performance of these stocks, particularly in the last half of the last year, continuing into this year, they've reasserted, the tech stocks have really reasserted their leadership in this market and pushing some valuation boundaries, I would think. So we've got, who do we have tonight? We got Microsoft, we got Google. Let's start with Microsoft. What's kind of the key thing here you're looking for?
I mean, with Microsoft, they're the only ones who have actually quantified the Gen AI tailwind. So they said for the Azure business, Gen AI was like a 2 to 3 percentage point tailwind last quarter.
Really? Okay,
yeah.
So that's material.
And then they launched Copilot. So we know they're trying to sell Copilot subscriptions to Office 365.
What is Copilot?
So this is like an add-on to your Office suite where you can use this Gen AI chatbot that sits on the side and asks questions in terms of just facilitating whatever you're doing in your Word or your PowerPoint or your Excel.
Really?
You have to talk to me like I'm your golden retriever. Will you explain to me exactly what happens at the intersection of the cloud, or in this case, what do they call it, Azure, and generative AI or whatever it is?
Yeah, look.
How do you make money and all that stuff?
Yeah, so that's where, this is a pretty expensive subscription. It's a $20 add-on to whatever you are already paying for the Office suite. And so as a consumer or an enterprise subscription, you are paying on top of what you are paying for Office 365. And for a company that's running their workload on Microsoft Azure, so there are 2 sides of it. One is the application side, which is the Office 365. The other is the infrastructure side of it. That's where if you want to kind of design your own AI agent for your website, you run that workload on Azure. And you pay Microsoft for running that workload instead of having to design everything from scratch. You're using OpenAI, GPT, and Microsoft Azure, which is all customized for you to deploy your AI agent.
I mean, they're the only ones who figured this out?
They were the early ones to do that, and that's where Amazon and Google are struggling, because they will give you the cloud compute, but they don't have that open AI integration that Microsoft did 6 months back or 12 months back. And so that's what's they're reaping the benefits.
So 6 months doesn't sound, or a year doesn't sound like that much of a head start. What can I expect from the Google and Amazon in terms of applications?
Yeah, so last quarter, both Amazon and Google said they saw some sequential deceleration in cloud growth. And because companies were optimizing their spend, they were cutting back on IT expenses. Well, if Gen AI is that tailwind that everyone wants to participate in, then they shouldn't be cutting their cloud spend at this point of time. And that's where you're going to figure out real winners and losers. Azure clearly is a winner from that Gen AI workloads moving to their cloud. It remains to be seen, is it coming at the expense of Amazon? Or Google is still a distant third in the cloud market. Remember, Google is like, in terms of the revenue run rate, Google's cloud is like a $30 billion run rate, Amazon is $92 billion, and Azure is $65 billion. So that's where Google should be losing share.
Got to bring numbers like this guy does.
Well, is this town big enough for 2 gunslingers or 3 or just 1?
I mean, I think it makes sense that there should be more than 2 players, and Gen AI has created that additional tailwind. So I wouldn't be surprised if NVIDIA or somebody else decides to really go big in terms of the cloud infrastructure opportunity, because that AI and cloud go hand in hand when it comes to, you know, how you go about deploying generative AI.
All right, so we've got Google after the close as well. Talk to us about, we'll get to their advertising business, but how does Gen AI, ChatGPT, that technology impact my, you know, where's the closest gas station search?
Yeah, I mean, look, right now, Google is monetizing about 20% of its queries. 80%, they don't show you an ad, but they show you blue links. With GPT, the promise is you get an exact answer. You don't have to deal with links. Everything shows up within the page. Now, that's going to hurt the publishers. If you think about it, publishers come to Google, they advertise on Google to get traffic. Well, if I'm showing everything on the page itself, I'm not getting any traffic to my app or my website. That's huge. I think more than Google, it hurts all the publishers that are not going to get traffic anymore, because that's how you acquired customers. So if I'm showing everything within the search page, that's a big deal.
So who would be a loser in that?
Like all your publisher websites, whether it's New York Times, Washington Post, any e-commerce website. I mean, look, these guys are not doing e-commerce, so you still have to go to Amazon to buy the product. But potentially, that is the promise, that if you conquer search and you show everything within the page, you don't need to route the traffic, and that's going to kill the advertising revenue that, you know.
Well, that's Google. That's the business model.
Google.
So why isn't Google down 50%?
Because nobody has figured that out yet, that, you know, showing a summarized answer is how the entire search is going to, you know, go in that
But
kind
Paul,
of domain.
all the useless knowledge that I sometimes spout off, I'm addicted to YouTube. That's where I get it all.
I know it is. I
mean, that's got to be worth something.
Yeah, that's separate from search. So the YouTube business is just running on all cylinders. I mean, the ad side is like a $40 billion run rate. Compare that to Netflix, which is more $33 billion. And then they have a subscription stream. YouTube subscriptions is north of $10 billion run rate at this point of time. So they really got everything going.
I'll tell you how cool YouTube is. This radio show, Bloomberg Intelligence, simulcast on YouTube. How about that?
Which is great content. I mean, Grant, there's a lot of crap on YouTube, but if you could find Bloomberg, you can go find lectures from some of the great universities and really become very well educated.
All right. So
not that I have, but
all right, I'll pay attention. I'll have a couple of screens going, one for Microsoft and one for Google. All right, Mandeep Singh, thanks so much for joining us. Appreciate it. Mandeep Singh, he covers all the technology along with Anurag Rana. They got a whole team in the U.S., in Europe, in Asia, one of the best technology research teams on Wall Street. They have I think, the definitive report out there on artificial intelligence, large language learning. I have no idea what that stuff's about, but they had put a nice, big, thick, juicy report there. Lots of data which is kind of how they do it at Bloomberg Intelligence. They show you what's going on. They don't tell you. They show you with the data, and that's how it's done at Bloomberg Intelligence. So appreciate getting a few minutes of Mandeep's time. S&P 500 absolutely unched on the day. That's all you need to know. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
And I'm John Tucker, the Bloomberg Newsroom. We're actually sitting here in the studio with Paul with your company news. Let's start off with, unfortunately, these are job cuts, so we'll go down the list. Starting with, you heard this earlier, United Parcel Service plans to cut 12,000 management jobs and explore the sale of its Coyote truck brokerage business. The CEO is trying to offset soft demand and higher union labor costs from that agreement that they came to. The jobs reduction, that's about 14% of 85,000 full and part-time managers. They say that's going to save $1 billion this year and more in later years. And then you have Nomura Holdings. They're cutting about 60 staffers. The firm's continuing to seek ways to cut costs across its investment bank. This is a response to the ongoing slump in deal-making and capital markets activity. And this isn't really company news. It's more like college, university, and personnel news. But I have to do it, Paul, because of the quote that's listed in here. Ken Griffin, who's one of the largest donors to Harvard University, says he won't support the school financially unless it makes significant changes. He also accused elite U.S. colleges of producing what he calls whiny snowflakes instead of future leaders. And TikTok testing a feature that could make all posts shoppable. The social media company's latest move to create a multi-billion-dollar U.S. e-commerce business. The new feature, so it uses technology to identify objects in a video automatically. We'll see how that's going to work. Then it encouraged viewers to find similar items on TikTok Shop by clicking into a page of products. This is according to screenshots and posts that on the app that we viewed at Bloomberg. And that's your company news.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, looking at these markets here, the Dow and the S&P kind of unchanged right now. The NASDAQ off about 0.4%. Yields come in just a little bit. The 10-year Treasury 4.07% on the commodities front. WTI crude oil up 1.4% again today, just below $78 per barrel. Gold a little bit higher here, $2,035 an ounce. And Bitcoin up slightly, 43,475 for the cryptocurrency. Right now, let's head down to Washington, D.C. We'll get world and national news with Immerse.
All right, thank you, Paul. A committee vote could come today or tomorrow to advance articles of impeachment against Homeland Security Secretary Alejandro Mayorkas. Democrats are rallying in his defense, as we hear from Bloomberg's Jody Schneider in Washington.
Basically, these articles accuse him of failing to enforce U.S. immigration laws and breaching public trust. Democrats are fighting back, saying that this is an attack over policy and that they're elevating this much beyond what it should be.
Bloomberg's Jody Schneider reporting from the nation's capital. Neuralink is a tech company owned by Elon Musk, and they've announced they've implanted a brain chip into a human for the first time, representing what experts hope is a major step into connecting the human brain to computers. This is just the first test, but Dr. Lee Kroll is a neurologist and assistant professor at Temple University and says this could be a game changer.
I really do think that in my lifetime as a physician, I'll be able to use this type of technology to help my patients, and I cannot wait for that day to come.
If it is successful for widespread use, experts hope that paralysis patients and others suffering from traumatic brain injuries could use a computer to speak using this chip. Ohio could begin executing inmates using nitrogen gas under a new bill backed by the state's Republican Attorney General, ending a years-long unofficial death penalty moratorium. It would require the nitrogen hypoxia pioneered in Alabama last week be used in cases where lethal injection drugs are not available. Ohio hasn't executed anyone since 2018. This could be the week we see a verdict in Donald Trump's civil fraud trial in New York. State Attorney General Letitia James wants a Manhattan judge to order the former president to pay a $370 million fine for falsely inflating the value of real estate to get more favorable loans. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. Paul and John.
All right, Amy Morris, thank you so much. We appreciate it. Well, John, you know, the Walt Disney Company's got some activist investors circling Mickey Mouse. One of them, activist investor Nelson Peltz, believes Walt Disney can achieve profitability in streaming by bundling its ESPN Plus online service with a larger player interested in sports, such as Netflix. That's according to people familiar with the matter. Peltz's Tryon Fund Management will publish a so-called white paper dealing its investment thesis and recommendations for Disney in the weeks after the entertainment giant's next earnings report on February 7th. That's according to people who asked not to be identified discussing non-public information. Would that be of interest to you, getting Netflix plus the ESPN together?
I'm not.
And would you pay more for that?
I'm not paying anything.
You're not paying anything?
I don't pay anything for any of these services. So
you got the rabbit ears up.
Yeah, no, it's just like, no, I have cable. I'm maybe cutting the cord soon, and just, you know, everything's streaming on the internet. It's going to be free. So.
Yeah. Well, we'll see what happens. Tryon will also argue that Disney's financial forecasts, including plans to spend $60 billion on its theme parks over the next decade, are too opaque, and that its management structure should be simplified to eliminate redundancy, and that Wall Street needs more details on Chief Executive Officer Bob Iger's recent cost cuts. Tryon, which controls close to $3 billion in Disney shares, is seeking 2 seats on the Disney board for Peltz and for Jay Rasulo, the former chief financial officer of the company.
The common denominator that just sort of pops off the page, Nelson Peltz also had some problems with PepsiCo, right? And now it's Disney.
Yep.
And the CFO at PepsiCo was Hugh Johnston, and now
he's at Disney.
He's at Disney.
Yep.
So he handled Nelson Peltz at his previous job, so now it's deja vu all over again. I would say.
Exactly right. Stock of Disney's up about 7.5% on a year-to-date basis, off just about 0.5% today. So a lot of action there. Bloomberg's Balance of Power with Joe Matthew from Washington, D.C. That starts right now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Joe Biden has made his decision on a response. Welcome to the fastest show in politics, as the president says Iran was responsible for supplying the weapons used in last weekend's deadly attack on U.S. forces in Jordan. We're going to get the latest from Bloomberg's White House team. Jordan Fabian with us here in studio in just a moment with insights today from Michael Knights from the Washington Institute for Near East Policy. A border deal has yet to emerge in the Senate. Have you noticed? The House, though, today set to begin the process of impeaching the Homeland Security Secretary. We're going to have much more on all these stories from our signature panel. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us for the hour as we continue on the radio, on the satellite, and on YouTube with a look at Wall Street. Charlie Pellet takes care of that for us from New York. Hey, Charlie.
And hello there, Joe. We have got the Dow higher, S&P building on yesterday's gains. Little change, but now advancing again at 49.28 on the S&P. We've got NASDAQ down 63 for the NASDAQ Composite Index. That is a drop right now of just about 0.4%. Earnings news, lots of reports. General Motors beat Wall Street expectations for the fourth quarter and does expect profit this year to grow on improved sales as the U.S. economy chugs along. But the automaker's more bullish outlook stems less from an expected uptick in sales in its home market and abroad than from a belief that its biggest problems in 2023 are in the rear view mirror. Job openings are up, along with consumer confidence in America's economy. And with that story, here's Bloomberg's Vinny Del Giudice.
The Labor Department reports job openings nationwide rose in December to the highest in 3 months, highlighting a sturdy labor market and buoyant economy. That strength is also boosting household hopes. The Conference Board's Consumer Confidence Index rose to a 2-year high this month, reflecting a slowdown in inflation and low unemployment. Vinny Del Giudice, Bloomberg Radio.
United Parcel Service plans to cut 12,000 jobs and explore the sale of its Coyote truck brokerage business in moves that CEO Carol Tomé is taking to offset soft demand and higher union labor costs. Again, recapping, U.S. stocks are trading mixed right now. We have got the Dow Jones Industrial Average up 55, gain there of just about 0.1%. S&P higher by a point, little change, while NASDAQ is in the red, down 60, a drop there of 0.4%. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
All right, Charlie, we thank you. Good to see you. Welcome to the Tuesday edition of Bloomberg's Balance of Power. I'm Joe Matthew in Washington, where we have news. The president leaving the bubble today on his way to Florida to raise money and making news, saying that he holds Iran responsible in the recent deadly attack on U.S. troops in Jordan. Of course, people for the last 48 hours have been asking, what will the response be? He says Iran is responsible, quote, in the sense they're supplying the weapons, unquote. To sort of unpack what he may have meant by that, we're parsing words at this point. Before we talk to Michael Knights, we bring in Jordan Fabian from Bloomberg's White House team. Jordan, it's good to see you. Every word matters in a tense situation like this. Much has been said about the options facing the president. He also went so far as to indicate, as Bloomberg is now reporting, that he's made up his mind. Do we have any sense of what it is?
Well, Joe, it appears there's going to be some retaliation militarily, whether that is against Iran itself or a proxy group, whether they're targeting personnel or weapons, as Joe Biden mentioned in that gaggle, remains to be seen. And these are the tough questions that he has to make in deciding how the U.S. will respond, because, of course, there are major consequences whatever way he decides.
I wonder if he intended to say that. Maybe that was all by design, but it sure seemed like the administration spent the weekend and Monday going out of its way to say we do not want a wider war. Jordan, we're not seeking war or a military conflict with Iran. But when you say something like that in the driveway, it makes you wonder.
Right. So that would suggest, I mean, and he did repeat that too, that he does not want a wider war this morning, right after he said that he holds Iran responsible. So that would point to something more limited, something more like a check-the-box strike like they've done against the Houthis over their shipping attacks. But there's a domestic audience as well. Republicans, some Democrats want to see a very forceful response because 3 Americans died in that attack in Jordan. So will that satisfy the domestic audience as he heads into a re-election?
That becomes the question. Of course, the language we're hearing from Republicans and even some Democrats, but look at the Armed Services Chair in the House, Mike Rogers. Biden's fear of escalation has morphed into a doctrine of appeasement. That is not a narrative that the president can withstand on the campaign trail.
No, his foreign policy has really come under attack. There's a sense that Republicans are trying to put out there that the world is on fire under Joe Biden's watch, pointing to the Israel-Hamas war, the war in Ukraine, and now these attacks on Americans. So he needs to show strength, and that's why he might need to do something a little more than just a token response here.
I'm sure you can speak to the line he's trying to walk here, though. He's got progressives on the left who are ready to bail on him because they think he's being too supportive of Israel. And he's got critics on the right, like I'm saying here, and even on both sides of the aisle, who think he needs to do more when it comes to Iran. It is kind of the definition of a no-win.
It is, but I will point out, Joe, that is how he won in 2020, was kind of pushing away the extremes in both parties and presenting himself as this reasonable candidate. So if he is in that position where the right and the left are angry at each other, he can kind of try to thread the needle that way. But at the same time, look, the polls show that voters are deeply skeptical of his leadership on the world stage. So he needs to, at least would like to have the Israel-Hamas war wind down. These hostilities against American forces stop.
Spending time with Jordan Fabian, Bloomberg White House correspondent, as President Biden heads out of town. He's on his way to Florida, as I mentioned. Fundraisers in Jupiter and Miami. Tickets going for as much as $250,000. Jordan, will he get an earful on any of these issues at some of these? He's been interrupted at so many events recently. I wonder if this is part of a fundraiser, a choreographed fundraiser that's happening outside of town.
A lot of pro-Palestinian protesters have disrupted him, as you mentioned, Joe. It happens a little less at the fundraisers. Those are a little tougher to get into. The crowds there aren't necessarily sharing the same views as those supporters. Yeah. He might get an earful from the other side of the sort of the Republican arguments that you made, which is he needs to do more to support Israel. He shouldn't be questioning the Israeli government at a time of war. So he might hear from the other side at this event in South Florida.
We heard from the Secretary of State, Antony Blinken, talking about a possible response. And again, while Bloomberg is reporting that the president has made up his mind, we don't know what that decision is. The line from the secretary, a response could, quote, be multi-leveled, come in stages, and be sustained over time, as opposed to, Jordan, some shock and awe bombing campaign that happens later on tonight. This may not feel like the response that some people get. This could come, to the secretary's point, in stages.
That's right. And I would look to the response against the Houthis as a possible model, which is there have been multiple airstrikes. They're trying to target their weapons depots so that they don't have the capacity to keep hitting shipping channels. You could see something like that against possible areas where Iran's drones are being stored.
Sure. The reporting today, by the way, that this may have been prompted, this attack may have been allowed because of confusion. They thought an American drone was coming back to base when apparently it was the one from this Iranian proxy. Have we had any confirmation on that?
Not that I've seen, Joe, but obviously that would be a concerning intelligence failure if true.
It's a whole new fog of war in the age of drones. It's remarkable. Jordan, thank you for coming in. We rely on Jordan Fabian on this program so often, Bloomberg White House correspondent, with the line from the other end of Pennsylvania Avenue here. As we add Michael Knights to the conversation, I've been looking forward to this. The Washington Institute, Jill and Jay Bernstein Fellow specializing in the military, and a real expert here on the region and the players. Michael, it's great to have you back on Bloomberg. We're talking so loosely about Iranian proxies. I wonder if we can be more specific before I ask you questions about what's coming next. The Houthis have been on the front page. Obviously, people are familiar with Hezbollah and Hamas. Are these the three primary groups we're talking about, or are there more?
Well, in some ways, Hamas is a bit of a newcomer, because they're a Palestinian movement from Sunni Islamic community, whereas most of Iran's proxies come from the Shia Islamic community, and they would include Lebanese Hezbollah, the first and earliest, the Iraqi Shia militias who fought on Iran's side during the Iran-Iraq War, for those listeners who can remember the 80s. And then finally, the newest member of that axis of resistance, the Houthis down in Yemen, who kind of form a southern Hezbollah, like the southern pincer of a kind of a crab claw that the Iranians have got around Israel and the Eastern Mediterranean and the Red Sea.
So what do you make then of what we're hearing from the White House? The president telling reporters that Iran is responsible for supplying the weapons in this attack that took place in Jordan, and that he's made up his mind. Do you have a sense, based on what you've seen already from the Biden administration, what might be about to happen?
I think what's about to happen is that we're probably going to strike inside Iran for the first time since the 1980 hostage rescue effort. Come? And that's, the reason being that essentially we've run out of options. We've run out of rungs on the escalation ladder. We're trying to convince the Iranians and their proxies to stop mounting attacks that could kill us in Iraq and Syria, and to stop attacking global shipping in the Red Sea through the Houthis. And they're simply not responding. So that tells us that you can't just keep attacking the tentacles of the octopus. You've got to attack the head of the octopus, the way the Israelis describe Iran's network. And I think that's coming next.
How do you do that and not prompt a wider war? The Biden administration has been so careful to try to not escalate things. Wouldn't that define escalation?
Well, it does, but this is what happens when you run out of road in your existing escalation management strategies. I mean, essentially, Iran and the US have both been what we call escalating to de-escalate, and both of their strategies have not been working. So essentially, we've got two failed de-escalation strategies hitting head on, like two trains hitting each other. And for us now, doing something in Iran is the next step. But of course, if you did something very lightweight in Iran, if you just pecked away at a particular base in the middle of nowhere, a Revolutionary Guard training base, if you went for some radars on the coast, what you're doing there is that you are breaking the seal on the Iranian homeland. You're saying we're ready to do this from now on. We haven't done it for the first 40 plus years of the Islamic Revolution's life in Iran, but we're doing it now. And we're only going to do it a little bit at the start, but next time it might be worse. That could have the shock effect required to make the Iranians back down their proxies, or it might require something even stronger.
What would be the Iranian response to an attack on Tehran or directly on Iranian soil?
If we hit something on Iranian soil, even if it doesn't really hurt very much, they're going to have to hit us back at one of our regional bases, probably Al-Assad in Iraq, which is where they hit us after we killed Qasem Soleimani, their senior general in the region, in January of 2020. They hit us back in Al-Assad. And even though we didn't suffer any killed that day, they rung the bells pretty badly through traumatic brain injuries of, well over 100 troops. So they're going to do something like that. If we hit them very hard in Iran, they might do something a bit more aggressive even.
That's just official action from Iran and the Revolutionary Guard. What would become of Iran's proxies, not to mention just lone wolf terrorists who would love a reason to strike at the U.S.?
Well, it's interesting to note that when we hit Qasem Soleimani in 2020, under the Trump administration, which was, about the most painful thing we could have done to them, honestly, they didn't get their proxies to hit us back immediately. They basically said to all of those guys, hold, we'll do it ourselves. This is our business. our revenge to get. And we can do it precisely in a way that probably the Americans won't respond to. And that was true. Trump came out and said, fair's fair, we hit them, they hit us, it's over. And so it may well be that that will be their response another time. The problem for the Biden administration is we want this cycle to stop. And ideally, we want it to stop before the Gaza war ends, which might happen in February or March, or it might take a lot longer. And so we're trying to work out what's the cold splash of water to the face that's going to make the Iranians find a face-saving way to just turn this off. And we're not sure if it's going to work or if it's going to make things worse.
Wow. Well, clearly the stakes could not be higher here. You might have heard me reference Anthony Blinken. He said something else yesterday. I would argue, said the Secretary of State, we've not seen a situation as dangerous as the one we are facing now across the region since at least 1973, and arguably even before that. Would you agree with that statement?
Yeah, I would agree. And, you know, it's hard not to look at a lot of the policies of the last 10 years and, 15 years and say this was really a problem of our own making, honestly, because we failed to stop these kind of threats before they evolved to become so significant and networked.
Well, it makes you wonder what future policy is going to mean with the two possible presidents. Let's say that this is a Trump-Biden campaign. What would this mean with a Trump administration less than a year from now?
Well, we know that Republicans are amongst the leading voices who want to move to mainland Iran and begin to affect the head of the octopus, not just the tentacles. So we could say they're more likely to do that in the future. I'll say one thing, though. The last 3 years, if you look at the failure to try and rebuild the nuclear deal, and then you look at the increasingly militarized competition with it between the US and Iran since the Gaza war began, there's no putting Humpty Dumpty back together. It's very hard to imagine any administration, Democrat or Republican, having faith in the idea of significant de-escalation with Iran. Instead, what we're looking at is more of a containment strategy, as we had with, let's say, the Soviet Union, open-ended, or North Korea. It's an open-ended containment mechanism, strategy against a near-nuclear adversary.
You think we'll see some action in the next 24 hours?
Yeah, I'm surprised we haven't seen it already, but I think that demonstrates the Biden administration is not willing to just hit the targets it can find, which is those in Iran. It's looking to hit the targets it wants to hit instead, which are probably some leaders who they're waiting for them to pop up in Iraq or Syria so they can take a whack at them there.
Think of that when you see the headlines. Michael, it's good to see you, and I appreciate you're joining us. Michael Knight's with us from the Washington Institute for Near East Policy, getting things rolling here on the fastest show in politics. We've got a lot to catch up on next with Nathan Dean, who joins from Bloomberg Intelligence. We'll take a look at what's happening here in Washington and the odds of a shutdown starting a month from this week. That's all they've got to figure this out, and I'm pretty sure not a lot has changed. I'm Joe Matthew in the nation's capital. This is Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pella. We've got the Dow higher, S&P, NASDAQ, both in the red. NASDAQ 100 index now down by 0.5%. Headline out of Washington, Senate Banking Committee Chair Sherrod Brown is urging Fed Chair Jay Powell to cut rates early this year, saying high interest rates are hurting small businesses and putting home ownership out of reach for many Americans. Now, policymakers are meeting right now. We get the Fed decision tomorrow, 2 o'clock Wall Street time. Jay Powell's news conference at 2:30. You can catch it live on Bloomberg Television and radio. Stocks trading mixed right now. Dow Industrials up 61, gain there of 0.2%. S&P little change lower by a point. Essentially a holding pattern right now with NASDAQ down 87, drop there of 0.9%. 10-year yield 4.07% with a 2-year now yielding 4.36%. Gold up $2 the ounce to $20.35, up 0.1%. And West Texas Intermediate crude 77.86 a barrel, up by 1.4%. JetBlue Airways among the companies reporting earnings this morning. It is evaluating deeper cost cuts, delaying aircraft, and reworking its flight network in an effort to return profitability in the wake of the near collapse of its planned purchase of Spirit Airlines. JetBlue shares, they are down 5%. Spirit up today by 7.3%. Recapping, S&P down a point right now, little changed. I'm Charlie Pellett. Joe Matthew, that is a Bloomberg Business Flash.
All right, sir, we do appreciate it. Charlie Pellett will have more on the markets throughout the hour. We do that every day here on Balance of Power, on the radio, on the satellite, on YouTube. Next hour, we'll also be simulcasting on Bloomberg TV, and Kaylee Lyons will join the conversation. In the meantime, I have to impersonate Kaylee, talking with Nathan Dean, our friend from Bloomberg Intelligence, about Basel III, which I'll get to. It's good to see you, sir. Thank you for coming in. The fact of the matter is the government is technically set to shut down a month from Thursday, I believe. You've been running odds on this. Nobody's getting along. Donald Trump's on the phone. Border deal on ice. Is this going to be a problem?
No, I don't think it's going to be a problem. I mean, March 1st and March 8th are the two dates you have to worry about. March 1st, 4 out of the 12 appropriation bills go up for a partial shutdown. The reason why I don't think it's going to be a problem is March 7th is the State of the Union address, and nobody wants a shutdown, especially when the State of the Union is already as late as it is. But the ultimate reason why I don't think there's going to be a government shutdown is there's really no strategy other than kick the can down the road. And there's nothing holding them to that date. They can easily kick the can. Speaker Johnson has already said, look, we've done it once. Remember last year he said no CRs?
Right.
Well, they did a CR.
We're getting ready for the third one then, right?
Exactly. And so they can go CR and CR up until this April 30th date where if we are operating under continuing resolution, we have 100% sequester. So that's the date where
automatic cuts kick in.
Correct.
Which was supposed to be a deterrent.
Correct.
Would force them to budget the government. Yet we're coming up on it with nothing.
And ultimately, if they get close and they need to decide that they want to kick that can down the road, they can certainly do that as well. But, because look, Congress is the one that controls.
It helps when you're writing the laws.
Exactly. They're the one that write the laws. But, that is the date in which I think Congress will have to come together and make a stand and say, look, we have to do something, because eventually they will want to kick the can beyond the elections. Because they will want to say, I'm done in Washington. I want to go back to my own district.
So year-long CR. Let's get it on.
I think that, I don't think we're going to have a government shutdown. I do think that this border security, Ukraine package, not package, and so forth, could get wrapped up in some negotiation in April. For me, it's never over until it's over. And I think that April 30th date is, once they figure that out, that's where things can be deemed over. But we don't think there's going to be a high chance of a shutdown. And even if there is, we've said it before, scary headlines does not equate to scared markets.
Well, boy, absolutely. Fascinating, though, that we'd be talking about, I guess, a 2-month, right? They'd bring that right up to April 30. Now we have a real deadline to potentially get something done. The defense hawks will freak out, because that would be a significant cut to defense spending in a time where they want more money.
Yeah, it's almost bipartisan. I mean, you don't touch defense spending. I mean, especially when we have issues happening in the Middle East, 3 American service people killed. I mean, that's not something that anybody really wants to play politics in a town where they play politics. So I ultimately think that they will figure something out to avoid that sequester. I mean, look, anything can happen, and we aren't running odds on that yet. We will in the next week or so with this April 30th time frame, because like I said before, nobody wants this to happen. Nobody wants to be seen cutting the military spending in an election year.
Right.
And certainly I think at a certain point, people are just going to say, I'm tired of Washington. Get me home.
What's the CR that gets the speaker fired, though. I mean, this is the kind of business that got Kevin McCarthy fired. He did vow, to your point, no more continuing resolutions. I won't do it again. Now he's going to be lining up the third with a very loud chorus in the Freedom Caucus who are willing to fire him. Add Marjorie Taylor Greene, I guess, formerly of the Freedom Caucus. She says she's got the motion to vacate ready to go.
Absolutely. But the question I have for them is who's going to take the place? I mean, it took 3 weeks to find Kevin McCarthy's replacement.
Does that keep them at bay? I mean, it's not like they're being rational.
I don't think it keeps them at bay, but the question is, what type of politics comes out of this? So we have seen statements from Democratic moderates saying that they would be willing to help Speaker Johnson. Now, that's a big if, and there's certainly going to be a lot of caveats on that. And the question is, if we're going to help out Speaker Johnson, what do you get in return here, especially as they're going through impeachment proceedings with the Secretary of Homeland Security and so forth like that. So I'm not saying that they're going to be there to save the Speaker, but the question is, what type of chaos will come in an election year if you were to try and engage in this fight? Now, I just, look, anything can happen. We could be talking on the show a month from now about the new motion to vacate and Speaker Johnson could lose his job and so forth like that. Yeah. Certainly can't count it out. But there are a majority of folks in Washington on both sides of the aisle that do not want to do this. And they just want to focus on governing, and they want to focus on bills, legislation. Patrick McHenry over at the House Financial Services Committee was complaining about all the lost months they've already had.
Yes, right.
That they're not voting on crypto bills or stablecoin bills, et cetera. So, I do think if there's going to be a motion to vacate, it's certainly feasible, but I think Speaker Johnson survives.
See, this is why everybody wants to hang out with Nathan Dean, get a beer at Bobby Van's, talk about politics. This is the same exact conversation that we have with Nathan when we're off the air, right? Now I'm going to do my best impression of Kayleigh, because we got an interesting call today from Morgan Stanley. And the first thing I thought, God, good thing Nathan's coming on. Basel III, maybe not as hardcore as we thought. Analysts at Morgan Stanley bullish on banks. They upgraded them today on expectations, as I read on the terminal, pending regulatory changes for higher capital levels will be less onerous than the current proposal. And that's exactly what all these banks are angling for. They're all up today on this. Goldman, Citi, B of A. What do you think of Morgan Stanley's call?
Absolutely agree.
Yeah?
So we've been saying this ever since the proposal came out. So the Basel III Endgame proposal raises capital requirements for about 19% for the largest banks. So the Bank of America's, Morgan Stanley's, if you will. Regional banks, 5 to 6%. Now, in the way that it does, the proposal focuses on 3 provisions: market risk, credit risk, and operational risk. There are holes in those provisions that pretty much, no matter who you are, somebody can find an issue with it, whether it's moderate Democrats or the banks and so forth like that. This proposal came out, and it's going to need substantial changes to get it done. Now, here's the question. Can the Fed actually make all those substantial changes, which we think will happen, which include changing of things like risk weighting for assets for mortgages, consumer loans, and so forth, decreasing that capital requirement number? So we're completely in line with Morgan Stanley and Goldman and the calls there. The question is, can the Fed do that, A, to avoid a legal challenge? I don't think they can do anything to avoid a legal challenge. It's going to come no matter what. And B, can they get it out this year? Because that's what everybody is banking on up in New York at the moment. They think the Fed cannot get this done in this year. And it's going to get kicked to the can to 2025 and then subsequently be at the whim of who wins the presidential election in November. Until I hear language from the Fed, though, that says that they're considering a delay, I still think that they're going to get it done this year.
I hope Kayleigh was in the lobby or somewhere where she just heard me ask you that. Perfect answer. Last one for you. We've talked about safe banking. We've talked about rescheduling. Cannabis, of course. Marijuana. There's a note out today, a release out from Senator Elizabeth Warren's office. She's getting together with John Fetterman on this, and Chuck Schumer's name is on the release as well, urging the Biden administration to not reschedule, but deschedule cannabis. Is there a world in which that could happen?
No.
Okay,
So,
let's move on.
No, when it comes to marijuana, there's 2 things to note, especially for the marijuana investors like MSOS, equity, and so forth like that. These equities jump like 15, 20% on any headline. But for us, our point of view, Safer Banking Act, 30% chance of passage this year.
Not good.
It's not good. There's not a lot of folks in the House Financial Services Committee, including Speaker Patrick McHenry. I'm sorry, former Speaker, acting Speaker, now Chairman, House Financial Services Committee, Patrick McHenry. I don't think he's on board with this. So the Safer Banking Act, you could see a vote in the Senate, some positive headlines, but it goes nowhere. Reschedulization is different. This is part of the executive branch. So the question there is this a political decision that will help us or help the White House in November?
Yeah.
Versus there are a lot of folks over at DEA that have lost friends and family battling marijuana over the last 30 years.
Yeah.
So I do think reschedulization is going to happen. We say 70% before August 1st, which obviously will bring some benefits primarily on the tax side. There's this thing called 280E for your tax rate. For a lot of these marijuana firms, the tax rate goes from like 40% down to like 5-10.
How about that? It could mean the difference between profitability and not, I guess.
Yep.
But descheduling, what does that even mean? It's treated like water? It's milk? What is?
It's over the counter.
It's not even on the list.
It's not even like Tylenol or anything like that. Deschedulization is almost like a form of just decriminalization.
Got it. And your answer was concise on that. It's nice to see you. Thanks for coming in to see us in our new incarnation. Nathan Dean joins us each week at this time now. That's a promise from Bloomberg Intelligence. He's U.S. Policy Senior Analyst. This is the guy who all of the clients call, the terminal readers, when they want to know this stuff, when they're actually making decisions on investments. And we get to borrow him once a week here with his great team at BI backing him up here in Washington. I'm Joe Matthew in the nation's capital. We're going to assemble our panel next. Rick Davis and Jeannie Shanzana were coming in after we get you up to date on world and national news. For that, we turn to Nancy Lyons in the Bloomberg 99.1 newsroom here in Washington. Hi, Nancy.
Hey, thanks, Joe. Illinois' election board is keeping former President Trump on the state's primary ballot. Today's decision comes a week before the U.S. Supreme Court hears arguments on whether Trump's role in the January 6th attack on the Capitol disqualifies him from the presidency. Israel is coming under fire for conducting a raid today on a hospital in the West Bank and killing 3 Palestinian militants. A hospital official says the Israelis came in disguised as civilian women and medical workers, and no gunfire was exchanged, indicating it was a targeted killing. The Palestinian Health Ministry is condemning the raid and is calling on the international community to pressure Israel's military to halt such operations in hospitals. The Biden administration's current approach to Iran is not working. That's the assessment from former NATO Supreme Commander James Stavridis following the Iranian proxy attack that killed 3 U.S. soldiers in Jordan over the weekend. Admiral Stavridis is arguing for a Goldilocks approach.
Cyber attacks, better intelligence collection, going after Iranian assets, but not inside Iran yet. We can still go after the Iranian Revolutionary Guard at sea, ashore. They are training, organizing, equipping, and directing Houthis, Hezbollah, the Iraqi Shia who have killed our American soldiers.
Stavridis was a guest on Bloomberg Surveillance. Neuralink, a tech company owned by Elon Musk, says it's implanted a brain chip into a human for the first time. Dr. Leah Kroll is a neurologist and assistant professor at Temple University.
This would be a major game changer if it were to be proven to be safe and effective.
Kroll says she can't wait to use this type of technology. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
headquarters. I'm Charlie Pellet. 1240 on Wall Street. Stocks trading mix right now. Dow Industrials, they are higher, holding on to a gain of 38 points right now, up by about 0.1%. S&P, NASDAQ 100 index, all in the red right now. Throw in the Russell 2000 as well. Right now we have got the S&P down 7, drop there of 0.1%. NASDAQ down 115, decline there of 0.7%. Russell 2000 down 18 points, drop there of 0.9%. 10-year yield 4.07% with a 2-year 4.37%. Gold up $1.10 the ounce, little changed, up less than 0.1% right now. $2,034 the ounce on gold. Bitcoin up 0.4%, 43,359 right now on Bitcoin. And crude oil up 1.4%. West Texas Intermediate now at 77.83 a barrel. Google and Microsoft will be among the closely watched tech companies reporting today after the close of trading. Russ Kosterich is portfolio manager at BlackRock Financial, and he says this batch of tech earnings are key for the equity market.
I do think gains this year are going to be more earnings driven, which means what we see from the leaders in the market, and of course that is tech and related names, is going to be a big driver of how the market does in 2024. We're constructive. We think we have an environment where nominal GDP is solid, call it 4 to 4.5%. Earnings estimates at 10 or 11% are reasonable, and tech should continue to lead on the earnings side.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Right now, both Microsoft and Alphabet are trading lower. We've got Microsoft down by 0.6%. Alphabet lower now by 0.7%. Recapping, stocks are mixed. The Dow higher, S&P trading lower. The S&P down now by 0.2%. I'm Charlie Pellet. Joe Matthew. That is a Bloomberg Business Flash.
All right, Charlie, thanks. We carry on live from the nation's capital here with a pretty scary conversation we just had with Michael Knights. This is the Washington Institute for Near East Policy. He's an expert on Iranian-backed proxies, and he says the response from the White House will not be against them. It will be against Iran directly. And it could come as soon as tonight. The president is in Florida today, a couple of fundraisers, one in Jupiter, one in Miami. We'll see what happens and whether or not he goes to the back of the airplane on the way home as we assemble our panel now. Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors, coming off a very newsy 24 hours here, and it just got a lot newsier, Jeannie, with the president talking in the driveway on his way out of the White House here for this trip to say that he blames Iran, that Iran was responsible for supplying the weapons used in this attack, and that he has made up his mind on a response. Do you have any sense of what it will be, having seen the menu of options for this president?
Yeah, a really tough decision for the president. The menu of options runs from, on the low end and to the high end. And it sounds like, if the reports are to be believed, and I don't know if they've been confirmed yet, that they have decided to hit Iran. And I think one of the big questions is, hit Iran how? Are we talking about hit a vessel, say, or are we talking about hit an Iranian interest, hit something in the area of oil, or hit Iran rather directly? These are very tough decisions for them to make, because as much as we need to think about retaliation for the deaths and the injuries that were caused by these proxies, horrific as they were, we also have to think about the issue of deterrence, certainly, but also what happens in the days, weeks, months, and years going forward. Are we going to get ourselves in a situation where we are in a direct confrontation or indeed war in the Middle East with Iran? So all of these weighing on the administration as they try to make, and the president specifically, a really, really difficult decision. And of course, we don't know yet what they've decided, but if it is hitting Iran, that speaks volumes out of what they've seen here and what they know.
Well, that's for sure. Rick, we haven't seen much for the sort of piecemeal approach we've taken to the Houthis. They attack a ship, we lob a missile. This has now happened 9 times, I believe. Will anything short of a direct hit against Iran make a difference?
Yeah, I think direct hit against Iran comes in a lot of different shapes and sizes, as Jeannie was alluding to. And I think Michael Knights is the kind of expert you want on this program to be able to talk about what those options are. But the bottom line is, this is a classic Iranian exercise. Push, 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 attack from all different sides, use all your carve-outs, Don't put yourself in the crosshairs. And then something like this goes wrong, where whether they wanted to do it or not, they've crossed a red line. And the red line is attacking a U.S. facility and killing U.S. personnel. And they're going to now have to pay a price for that. The question is this an example of escalate to de-escalate? If we do then hit them, is there a moment where everyone says, okay, now we're even? And I know that sounds very, schoolyard, but the reality is a lot of this geopolitics is schoolyard politics. And the question is, can we get the necessary behavior from Iran by being tough here? And of course, the hawks are circling the White House. Senator Cotton, Senator Graham, Senator Cornyn, all these people want to see a hit on Iran. But in 1988, we sank the entire Iranian Navy. I mean, it wasn't much of an exercise, and the Navy's gotten bigger since then. But that was one of the tactics we used to send them a message saying, enough's enough. And after that, everyone kind of pulled back. So that's a classic example of escalate to de-escalate.
The political implications here are huge in an election year. Jeannie, you heard the line from Mike Rogers that we read a bit earlier, Armed Services Committee Chair. Biden's fear of escalation has morphed into a doctrine of appeasement. Is this going to result in a more aggressive response from Joe Biden, the criticisms that he's hearing?
I hope not. Arguably, it will. It's an election.